Let me get in Mehraboon Irani as well. Mehraboon, good afternoon. Thanks very much for joining in. Your thoughts broadly, first of all, on what we're seeing in the market. There's a bit of recovery.
Well, I would put it this way, that the trade war, which was something which was a rhetoric and one never knew how much it will possibly go up to, I think now the market has right now taken it in its stride and the market wants to move ahead. Also, as far as the fall goes or the correction goes, let us not forget the fact, let us in fact accept the fact that nearly 95-97% of the market is possibly at a level of a Nifty below 10,000. So a large part of the damage seems to have been done. Now the market wants to just move ahead. Shorts are getting covered, and honestly I will not be surprised, and I don't want to justify it fundamentally, Prashant, but honestly I will not be surprised if you and I and others possibly around us over the next 2, 3, 4 days start discussing the possibility of a new high coming soon. Is this the time possibly to try and build a long-term portfolio? My answer has been no. But at the end of it all, I have always advised my investors to adopt one of the two strategies. One strategy is to buy stocks which are otherwise good quality stocks. And my friend Mr. Tulsian mentioned one of it, Federal Bank, maybe an Ambuja Cement, maybe a Bharat Electronics, stocks which are not going to fall anymore, but which will ultimately go up. Or buy into companies or stocks which have done very well and which have corrected sharply, but the companies continue to do well, and just go and buy into them. And that is what ultimately is making investors possibly earn some returns in good quality stocks. Now we also have to accept one more thing, that there has been a large impact cost which has happened, especially in mid caps and small caps, when nobody wants to buy and people just want to sell. They want to bring down the leveraged position. They have suffered reverses in F&O position. Brokers are asking them to make the payment. So they are trying to sell the mid caps and small caps, which has happened over the last 1 to 3 months. And the impact cost has created a lot of damage in some of the stock values, and now the reverse is happening. The impact cost is working out in the reverse when people are wanting to buy and people are expecting the markets to rebound. Everybody wants to buy, even if it's a short-term bet, and the stocks are going up very sharply. So I personally believe this could continue to happen, but at the end of it all, investors need to learn one lesson. And the lesson is, don't try to buy the cats and dogs expecting them also to participate in this rally. Wherever this rally takes us, whether we see a new high, whether we discuss a new high, ultimately doesn't happen. But at the end of it all, ultimately it is quality which pays. To adopt one of the two strategies. Go in for good quality companies which cannot fall further, or go in for good quality stocks which have retraced a large part of the sharp rally which they have seen over the last 12-18 months, and which have come to levels where you can possibly say, well, I am buying it because the downside is limited and the upside is going to be much more over a period of time.